Well, there are options for government. Whether government has taken the option is another kettle of fish. Two, there are economists, and especially what I've heard in recent time and what I've observed in the public space and in the media space is that government seems to have this continuous romance with classical economics, those who want to have textbook manifestation, that when you raise interest rate, which is exactly what central bank has done, textbook teaches, and I mean the intermediate level of knowledge in economics, it's important I add that to it, that when you raise interest rate, within a short period of time, inflation will come down. My concern here is that we have done that over the years. Governor Emefiele continue to increase interest rate to above 18%, rather than price coming down, it keeps going up. What is the implication? As we are mopping more from the economy because we thought it's money supply, one of the reasons why we even have the policy we had regarding Naira, not denomination, we have regarding Naira, that's introducing new Naira notes so that people can bring their money to the vote. The question is, has that reduced inflation? The answer is no. I'll be very sincere with you. Raising MPR on 400 basis points is the first time in the history of Central Bank of Nigeria. So that policy itself will not go without its implication. The first implication is that the policy is anti-growth. When you raise your MPR like that, it will have implication on your gross domestic product growth rate. So the GDP growth rate will surely be hampered by this policy. Number two, I will tell you the benefit of the policies too, because maybe I should start with the benefit before I go to the deep concerns that this policy has. The first benefit of this policy central bank is trying to target is using inflation targeting method. That is, we have written in the budget that we want to achieve 21% inflation rate, which already is an high inflation rate. 21% is even high inflation rate. Frozen to 30%, you're already in hyperinflation rate. So we are supposed to be having 6 to 9%, but central bank is targeting 21% and says if we jack up interest rate, we will achieve this. And it is possible too. Central bank is looking at having foreign direct investors come into Nigeria. But you now ask for what interest? Because when investors come, they are looking at, and I must say that it is not, the target is not to bring in real investor. The target is to bring in portfolio investor. So if you bring a portfolio investor, of course, which we all know that with the slightest challenge with the economy, it is easier for them to lead the country. And this is what we have seen, not just with President Tinubu, President Buhari, President Jonathan, from President Obasanjo to date. Anytime there is slight crisis with the economy, portfolio investor will always lead. So if you are targeting the same to come, what rate will we give them? Are we going to give them our treasury bill or bond at nearly 30%? The answer is no, maybe 25%. At that time, they are still going to lose. And these guys have investment analysts. They will hire economists like us and some of the persons you invited to your studio to do the job for them. We analyze, if you take this decision, this is what you have. So rather than us building our economy to be stable, that's not what we are doing. We are looking for quick fixes so that we can come out of the crisis and start having some inflows very quickly. Yes, that is important. The question is, what is fiscal and trade authorities, what are they doing about this? So I've told you the target and this what central bank is looking at in order to achieve some of these goals. But what are the challenges with it? I've told you the implication on growth. The second major implication is unemployment. You see, as we have increased the interest, as the interest rate has been increased, bank will be writing their customer to say, the money you borrowed when MPR was 18.75%, now that it has been increased of 400 basis points, there is that increase. And you can survey this among business people that borrow money from bank. If some bank have magnanimous and they don't do that, new persons that want to collect money from bank, they are going to increase the rate from what it was before. What does all of this mean? We have crowded out investment. And when you crowd out investment, you've also crowded out employment. So unemployment would increase. Someone may say, but unemployment just increased to 5%. No. The unemployment that increased to 5% is those who cannot get job 1 hour in a week. And I'm sure that is not what you desire. We are looking at 8 hours. I mean, we are looking at 40 hours a week. That's having 8 to 5 in terms of employment, or worst case scenario, 20 hours a week. And if you ask the Bureau of Statistics to share the numbers with you, I'm sure it may cause some deep concern within the current economic quagmire. It also has implications for markets. the capital markets is celebrating growing in leaps and bounds. As government increases the debt market rate, that is treasury bill and bond, you have seen federal government bond, FGM bond, you have seen treasury bill also increasing. You have seen quite a number of debt market, that low risk market, increasing rate is going to cause disincentive to the capital market. There are a few other things which I think should have been thought through properly before the policies were made. What are the options? If I can answer the part B of your question, the options are there. Fix the fiscal side. Fix the fiscal side. The current inflation that we have in Nigeria is not demand pull, it is cost push. You have spoken about custom. The cost of custom, the custom is charging has an implication on prices. We also know that farmers are being killed. For those of us who also have the privilege to operate in agro-allied, we can tell you that farmers are finding it difficult to also make some production and output for us to consume in our factories.